We'll call the meeting to order. This is October 30th, 2025, and it's a Council of Revenues meeting on total personal income forecasts. Welcome everyone the day before Halloween. So the first item on the agenda is Babers, has there been any communication to the council or public comments?
There were no public comments or communication, and
Okay.
I'm checking the webinar chat. So if there are any comments, please do right there. We currently only have 5.
Okay. Or someone can raise their hand if they want to make a comment or
Okay.
communicate.
Yes, please do.
We'll give it about 30 seconds or 45 seconds to see if anyone has comments or want to communicate with the council. Do we see anything, Babers?
Nothing to this point.
So there's been no communication or public comment to the council. Okay, the next item on the agenda is the minutes of the September 4, 2025 General Fund meeting. Are there any comments or does anyone want to discuss the minutes?
Move to approve.
I second.
Okay, so there's been a motion to approve, a second. Does anyone want to discuss the minutes? Okay. Okay, we'll take a vote on the approval of the minutes. Vice Chair Maynard?
Aye.
Dr. Bonham?
Aye.
Councilmember Hayashi?
Aye.
Councilmember Asagard Klein?
Aye.
Councilmember Hamasu?
Aye.
Okay, so we have 5 people, right, today? Or 6 people? 6 people. Yeah, so the minutes are approved unanimously by 6 council members. Okay, the next item on the agenda is deal tax announcements and presentation.
Yes.
Babars, would you like to proceed?
Yes, please.
Okay.
Okay, good afternoon, everyone. I have a brief presentation, kind of an overview of where we stand and some of the updates to data. What I'm going to start with is in reference to last year, the forecast was 5% in the first meeting, and then it was 5.5% in the second meeting by the council. We have 2 meetings, TPI meetings in a year, and the June numbers released by BEA was 5.55. So we were right on track. Those numbers have been revised upwards for the last 4 years. Now that number has gone up to 5.92. If we actually look at how they have been revised, they have revised all the numbers 2020 through the second quarter of 2025, and all the as you can see, they have been all revised positively. So it's a moving target, as you know. I just wanted to point that out. But where we stand, yes.
I had a question. On that prior slide, upper right-hand corner, when it says final, is that because it's a federal fiscal year, September 30th?
Yeah, what I mean by final is like for our meeting purposes. That's why it's in quotation marks. I mean, they might be, they get revised in September, and for that reason, I called the June numbers preliminary, and the ones that are released in September, the final numbers, as it pertains, for our TPI meeting.
So this doesn't have anything to do with the fiscal year. This is just when the BEA's schedule of revisions, and there will be one more major revision, but that's likely to be something like 10 years down the road.
Okay, so this is the revised numbers issued by the U.S. Department of Commerce?
Yes,
Bureau of Economic Analysis. Yeah.
exactly. Which is our main source of data for all the components of total personal income, and they are the ones who measure things like GDP and hence related measures, macroeconomic measures. For our first meeting was in July, and currently the calendar year 25 forecast was 4.9%, 26 was 4.6%. When I ran the models for this meeting, the forecast is on the average 5.7 for 25 and about 5% for 26, so a bit more optimistic. And to give you some perspective why that might be the case, we now have the fiscal year data completed for 25. The main factor, some of our most important exogenous variables in the models are construction expenditures. This is the contracting base, obtained from the general excise tax. Liabilities, and that shows about 14.8% growth in fiscal year 2025, and the visitor arrivals also show a positive number, 3.3%. So that's the main reason why you kind of see higher forecast values from the models in 2025, and that goes down to about 5%. And for that one, we do rely on the forecast of these exogenous variables provided by the council members themselves for the general fund meeting, the previous one that was in September. So as you can see, the forecast figures for 26 are a bit more conservative as compared to the actual that has happened in fiscal year 25. Comparing this, the council also make individual forecast of TPI for the general fund meeting when they provide their forecast for different economic variables. So those were more optimistic, standing at 5.85 and 5.4%. And then comparing that with the outside agencies, DBET has 4.5, 4.4, and UHERO is a bit more pessimistic, 4.2, 3.8. And if we take the average of all these, including our models and the outside agencies and the council's own mean forecast from the September meeting, we are at 5% for 25 and about 4.7% for 26. In
Hey,
terms
Boris,
of,
can I ask a question?
yes, please.
So you're referring to the council's forecast, which are fiscal year forecast, but we're doing calendar year. So you're averaging 2 fiscal years. Is that what you're doing?
Yes, that's correct. Yes.
Okay.
In terms of the first 2 quarters of calendar year 2025, this is the BEA's data so far. So if we were to assume that this is going to be the average for the rest of the year, you're looking at something like 4.7%, 4.8% year over year on an annual basis. Here are the council's forecasts in comparison with the model forecast and the average of all independent forecasts. Now, are there any questions? I just wanted to kind of put it in perspective in one place. I mean, this is all in your workbook, but I know it's easy to get lost in all the different tables and whatnot. And with this, if there are no questions, I would like to pass the floor to Chair Kawafuchi.
Thank you, Bebars. Okay. Anyone want to start off our discussion? Dr. Bonham, you usually help us start.
Yeah, I guess the thing that jumps out is, so the revisions were pretty substantial. Raised last 2024 growth rate by about 50 basis points, and raised the growth rate in the first half of, well, the only data point that got revised was Q1. Then we got the Q2 data for the first time. If you look at the quarterly pattern, the growth rates are slowing, or at least from Q1 to Q2, the growth rate on a year-over-year basis fell about 50 basis points. And that Q2 data point is going to get revised. We don't know when, because the government will have to be open for that to happen. So the other thing that has happened, and I'm not fully, I suspect that the BEA has taken into account. So let me go check and see when they did the revision. So let's see, our data portal shows that data point was updated 34 days ago.
Yeah,
So that
September
means
26th.
So that means they had the data necessary to do a revision, a benchmark revision of jobs data for the state. They haven't published it. When we did our last forecast report, we used what we call an early benchmark, and it changed the jobs picture entirely for the state of Hawaii. It shaved, I want to say, close to, I think it's close to 1% off the job growth for the year. Right. So if you look at the unrevised data that's published by Department of Labor and the Bureau of Labor Statistics through the last data point, which should be August, I think it shows almost 2% growth in payroll jobs. And when we do our preliminary benchmark, right, which is just rebasing the data to the population of workers who are on unemployment insurance. So this is not making up data. It's it happens every year, and it's a standard procedure. And we get, I believe it's 0.7. So it's a big, and if you were to look at a graph of payroll jobs in Hawaii, they basically were rising pretty rapidly through 2024 and then have just gone sideways. It just completely stopped. So what I'm getting at is that we started off the year reasonably strong, particularly in the first quarter. And what we've seen in the jobs data tells me that the income data is going to slow pretty markedly in the second half. And so I think we have we haven't done our next forecast, so we haven't completely incorporated all the revisions, but we're probably going to get about 4% for the second half of the year, right? So an average of just a little under 6% for the first half, and then 4% for the second half. And that's also consistent with what we've seen with the tourism data, which was basically a nosedive in visitor spending and since the spring. And when you look at the tourism data that we have going forward, I mean, the most high frequency tourism data, so total passenger count for so we have month to October 29th right now, and we have the September data, and both of those for the total passenger count are down, I want to say, over 2%. I'd have to double check it, but I can do that right now. And I mean, the seats outlook is relatively flat. We're getting some. The passenger count is a little tough to make perfect sense of, because the Japanese passenger count has really jumped quite a bit over the last couple of months, but that may actually be Hawaii residents returning from Japan. Actually, the month to date, that's domestic. Month to date domestic is down over 4% for October, and in September it was down 4%. Let's see if I can find the total VAP. There it is right here. Total passenger count through October 28th is down 2.5%. And in September, it was down 3%. So it doesn't look like the tourism downturn is bottoming out or quickly coming to an end. If you look at the advanced bookings for the winter, the October number was negative. The November, December numbers are small positives, but there seems to be a trend of those numbers. So like when you're in October and you're looking at November bookings and December bookings, they're positive. But then by the time you get to the end of November and you're looking at November bookings, they're negative. So it looks like what's happening is maybe people are waiting to book to the last minute, and we're not getting the same sort of year-over-year book growth in bookings of the last minute people as we have in the past. At least that's my interpretation of it. So if I were to pick a number for 2025, certainly would be below 5%. What was the model forecast, Baybars? You're on mute.
Sorry, it was 5.7.
Yeah, that's and yeah. The last forecast that we did had 4.2 for 2025. That's too low because of the revisions. But somewhere between 4.2 and 5 would make sense to me.
The official forecast was 4.9. 4.9 for 2025.
I'm comfortable with that. I mean, I think it'll probably be a little bit lower than that, but
Yeah.
in the ballpark.
The comment you made, Carl, about payroll, job growth, that also was, it showed in the withholding taxes at the last meeting that we had. There was a decrease.
Well, the withholding taxes should be going down, right? Even if payrolls were constant because of the tax law changes.
I mean, that's a factor, right? But isn't the employment also a factor?
Oh, absolutely.
Yeah.
You have to, people have to be working to pay the payroll tax. So, so basically what I'm saying is that the growth in jobs has largely stopped. And actually if you do a 6-month average of jobs and look at the growth rate on a 6-month moving average basis, just to smooth things out and to try and look at more than just a month-to-month variation, it's negative, very, very slightly negative in the August data. And I had mentioned this earlier, but I don't know if we were live or not, but by our calculation, the unemployment insurance claims are now slightly above any point they've been at for this year. So not markedly elevated by any stretch, but they're not heading in the right direction. Let's put it that way.
Carl, with regard to the SNAP benefits and stuff like that, that's considered transfer payments, right? So but it's not material in the whole grand scheme of things with regard to TPI, because it would be, because with the federal funding, I guess, potentially running out, and the question is whether or not it's going to recover or even pay some of the back benefits. I mean, do we have to factor that into?
But how you do that, I don't know. I mean, if you're a betting person, I would bet that the courts are going to decide that they have to pay them because they have the reserve fund. It's specifically, for emergencies, and it strikes me that going without food is an emergency, and they've done it before, right? So. That doesn't mean that if the government stays shut down into December, they'll still run out of money, and then we would have to be taking that into account. And I mean, we're talking about something on the order of 50 million a month. So this is not small. But how the state is trying to free up money but the challenge is the state can't put money on those. What are they, EBT cards, right? So, they would have to be providing money through a different channel, which makes it more.
But actually, I think because the governor just had a press conference earlier this afternoon to talk about that. So you're saying they can't physically put the amounts if the state
I don't think they can.
I think that was part of the discussion. that
Oh,
they
good.
were confirmed that they were able to do that, because they weren't going to put the money on it, because then if
Mhm.
the federal government then shut down the EBT cards, if they shut down the whole process, then it would
You'd
be
lose the money.
stuck.
Yeah.
Yeah, right. So I think that's the discussion that's just happening now.
I mean, that would be a big deal if they're able to, right, to get the
Mhm.
money to the recipients in a way
Right.
that, and yeah,
And I think they're talking about a sum of $250 per recipient, $250 to, put on a to put that, slap that on the card so that they have that easy access and can use it right away. But that kind of speaks to the whole, I mean, how much is that going to offset the lack of transfer payments that aren't being, normally distributed? Is it just a tiny dent? Right.
So unless I'm mistaken, the average recipient gets something on the order of $340 a month.
Mhm.
So if they were doing 200 or 240, it still wouldn't make everybody whole, right?
Mhm.
And this isn't the only, right? The women, infant, and children money may not be there, and certainly there are people who are not seeing payments. I mean, I've heard stories of people who provide services through TRICARE, right? Private providers who, provide home care or physical therapy or whatever, and they're not getting paid.
Mhm.
And so, yeah, there are good reasons to think that income is going to be weaker. And then the question is it all going to be made up before the end of the quarter?
Right.
Will it ever be made up?
Ever. Mhm.
Or will it be a bounce next year? As a general rule, the shutdown historically, right, that only goes 4 or 5 weeks, well, if that long, doesn't really show up in the income data very much, right? It goes down, then it goes up, and it's mostly a wash.
Mhm. Mhm.
The forecast in our packet, we show that the DBED forecast for 2025 is 4.5.
I'm good
And
with that.
your hero forecast was 4.2. So we
Yep.
are, and it's not all doom and gloom, but yeah, I'm certainly seeing some indication of some slowdowns on the personal income side. So is our 4.9 too high?
Probably. Yeah, I mean, I think the 4.2 is too low because of the data revisions. DBED got lucky, and I think they probably are pretty close to right on 2025. 4.5 makes sense to me.
I mean, should we change our forecast to 4.5?
I'll move that.
I'll second.
Any further discussion at 4.5? Okay, if no one wants,
So in regards to the federal government shutdown and all the pending job losses, which should negatively affect personal income,
yeah,
is that 4.5 an accurate number then?
you're suggesting it should be lower? Or
Well, I don't know what the negative impact of all the job losses from a federal perspective is, but it seems, if we're only looking at SNAP payments and things like that, I mean, seems like it would be even more than that.
especially
Well,
if it continues to the end of the year, it would.
yeah, I mean, if it goes on through December, then 4.5 is too high.
Yeah.
Then we're probably talking more like a 4.2, because then, I mean, basically the number of people who aren't getting paid will expand to various contractors, consultants. It won't just be people who are furloughed.
Yeah.
And if it goes on through the end of December, we don't have any way of knowing whether this is going to end. I would bet it's going to end in November, and that most of these effects are going to be washed out by the end of the year. But that assumes that everybody's going to get paid.
I think we all know it's a negative, but trying to quantify it is the hard part, right, Mike?
And also, it's a big unknown how long
So the sort of rule of thumb that economists
it's
tend
a
to
big
use.
unknown how long the federal shutdown is going to be. Yeah.
So the rule of thumb that actually the Congressional Budget Office released an analysis a couple days ago, and they basically, depending on how long it lasts, if this were to end in November, then they're thinking about an impact to U.S. GDP of about 0.1, maybe 0.2% percentage points, right, on the annualized growth rate for the quarter, and then it gets made up in the following quarter. And actually, I think if it ends in November, they were talking about 0.1. If it goes into December, it's more like 0.2 or 0.3. So the basic rule of thumb is that for the longer it goes, the worse it gets, and you're talking about maybe 0.1, 0.2 percentage points for every 2 or 3 weeks that it goes, and that's for GDP growth. The income effects could be larger than that, and so I mean I don't think we have any good way of distinguishing between, say, a 4.2 and a 4.5 and say, that's why we chose that, because we just don't know. When there's a lot of pressure building for this thing to end because of the SNAP benefits, because of the Affordable Care Act premiums that are now being announced, because of Thanksgiving travel. I mean, if we were doing our forecast right now and we had to release something, we would probably be betting on this ending before Thanksgiving.
Well, it's hard to imagine that it would continue into the holidays. I mean, just from a political, from an optics point of view, I can't imagine
nobody
that it would
wins.
Yeah, exactly. But then again, how many things are different now than we've never ever anticipated anyway? So
yeah,
I don't know. So Carl, this is maybe a really stupid question, but just kind of, when you were talking about, when you were reporting out before about the kind of trend in the jobs. So what's kind of like the time lag between when you see the downward trend in job growth and then the income effect that comes from it? Is there like a kind of set time frame?
There shouldn't be much of a lag at all, right? It should be relatively simultaneous, and but the question is whether the BEA is using, all the data they have available when they're estimating the income numbers for the state. And so, for example, those big revisions that we saw, a bunch of that was because of the changes to population data that we got. Right, the census raised population in 2021, 2022, 2023. I think maybe it didn't go all the way back to 2021, but it certainly, they raised Hawaii's population estimates in 22, 23, 24. And so the jobs numbers also got revised. So when we did our benchmark revision, the jobs numbers for 2024 also go up. That's one of the reasons why the growth rate slows down so much for 2025. But if you look at long periods of time, if you look at a graph of payroll jobs and total income, particularly if you look at labor income, it's really labor earnings that then they're almost the same data, right? The only difference is the average wage rate. There can be big variations in the transfer payments and the and dividends and things like that cause them to separate, but they really ought to be. So hence, when we forecast no job growth or a decline in job growth, our income forecast is going to follow that, not with a lag. It's going to be simultaneous.
Okay.
But whether the data comes out, the data doesn't come out simultaneous, right? You get some of the revisions before you get others.
Okay. Yeah, that makes sense. So is there any other types of income, though, that we haven't really talked about in terms of proprietor's income that goes into TPI or any of those things that there's been any changes in? I mean, not just in.
Well, it's definitely, I mean, it's there, right?
Yeah.
We haven't dug into that subcomponent, but you would expect proprietors' income would also be suffering during the downturn, right?
Right. Mm-hmm. But yeah, but whether you see a bigger chunk of it than normal, you know.
The place where that could show up is actually it could be coming via real estate channel, right? If we're not closing on transactions because you can't get a VA or an FHA loan, or you can't get flood insurance, then that would start to weigh on people who may be reporting income as sole proprietors.
Mm-hmm.
Unlike some of the reports that you might have seen in the press that claim that Hawaii is being impacted worse than every state in the country, and relied on our large share of real estate and GDP, completely confused by what that means. I mean, the people who produced the report, we have a smaller share of bank loans that are FHA and VA than the rest of the country, because most of our properties are too expensive for those. And so we're not really being affected disproportionately more. And the estimates that I've seen on the number of people in Hawaii, it was a pretty good estimate from a group called Smart Assets. And they actually looked at the reports of all the agencies on their plans for the shutdown and used those to estimate the number of furloughed people in Hawaii. And when they did that, we ranked 8th in the country instead of 1st in the country, which is what you would get if you just looked at the share of civilian, federal civilian workers.
Yeah, within the workforce. Yeah. Huh,
yeah,
that's interesting. Wow.
So I don't think we're, it's lousy, but I don't think we're at the top of the list for pain. And we don't have a disproportionately large share of recipients of SNAP. We do get more money because of the cost of goods. I think I'm pretty sure that in Hawaii, the typical payout is quite a bit higher than it is nationally. Okay, Mike. So I made a 4.5, and I'm fine with that, but I understand there's definitely downside risk for sure. So one thing to keep in mind is that this forecast, we ought to be trying to get it right, obviously, but the only purpose of this forecast is for setting the spending ceiling. And my guess is that the state's not going to hit the spending limit in this next budget just because they're going to be dealing with the situation with tax revenues in general and worrying about that. But like I said, we should be trying to get it right.
Any further discussion? Okay, we'll take a vote. Vice Chair Maynard?
Aye.
Dr. Bonham? Dr. Bonham?
Yeah, aye.
Okay, Councilmember Hayashi?
Aye.
Councilmember Ostaka-Clan?
Aye.
Councilmember Hamasu?
Aye.
So the vote carries unanimously for a total personal income forecast for calendar year 2025 of 4.5%. Okay, the next item would be calendar year 2026. Anyone want to lead us off? Besides Carl, I want to give other people a chance.
Please.
Yeah.
Well, I don't have a crystal ball, but it's hard to be overly optimistic about next year either. So for what that's worth. And again, the hard part is coming up with a number given that thought, right?
The forecast that we had in our last release was 3.8. And I mean, our forecast was kind of bleak, right? It was for a decline in real income and a decline in jobs.
Well, I mean, all the models on the list are lower, obviously lower, right? But so Carl, what did you say? It was due to the decline in jobs and
So our I mean, in 2020, well, so we have a decline in visitors in 2025 and 2026, a decline in visitor spending. The real visitor spending in our last forecast was minus 5.8% for 2026. And we had a decline in population of 0.1%. Our nominal income forecast was 3.8%. And I said we had a decline in real income, but it was actually just 0.1. And non-farm jobs declined by 0.4%. And I mean, the revisions that have happened since then, the income revisions, if 2025 is higher than we were before, chances are our forecast is going to be a little bit lower on a growth rate basis for 2026.
Carl, do you know how much the Century golf tournament contributes to the growth and revenues and visitor spending? Because knowing that it's canceled next year, that I gotta imagine that's going to have an impact because it's not a small group that comes over for that. And then they're talking about it's going to have ripple effects to the Sony as well, because some of those come over for the Century and then stay for the Sony. So, and visitors come in to watch both tournaments. So, do we have any indication of what that impact might be?
There is data on that. What I remember seeing was that I think Century had paid somebody to do a economic impact analysis of one of their recent tournaments. And this would have been just for Maui. And the number they were coming up with was something on the order of $50 million a year. And so, that's a big deal on Maui. It's not a huge deal, right? That's gross, right? And I don't know if they did that. It should have been done in a way that it's comparable to GDP. So, for a state with GDP, well over 100 billion, and you're talking about 50 million. But if it spills over, I could see how it would impact, the Sony, and certainly it impacts the marketing side, and the impact could be bigger down the road. I mean, I think our forecast for tourism for next year is bleak enough as it is. And actually, when we do our, we work on updates throughout the quarter, and I'm thinking that when we release our next forecast, it'll be a little bit less pessimistic for tourism, just because of but that depends on some of those Japanese passengers actually being Japanese visitors instead of returning residents.
And Carl, do you think the interest rate cut, obviously that impacts credit card debt, so people might be more willing to spend a little bit more because they're in their mind, they may be thinking they're not paying as much, but
it can't hurt.
Yeah.
Right. Of course, the rest, I mean, for many of us, it means that our high yield savings accounts are going to earn less. But yeah, I mean, the movement of the interest rates, it would have been nice if the long rates had gone down along with the Fed funds rate, right? But I mean, the 10-year actually ticked up over 4% again. But still, having said that, right, mortgage rates are quite a bit below where they were 6 months or a year ago. Not that it's showing up in the real estate market. I don't think that can hurt. And the thing we haven't talked about, the other drag, for that much bigger drag than say the benefit we'll get out of the interest rate, is what people are seeing on their insurance premiums for the Affordable Care Act marketplace, and what people will see in terms of lost insurance when the Medicaid changes go into effect next year. I think that's at the end of next year. I'm pretty sure it doesn't. It's because it's not supposed to hit until after the midterms.
Yeah, I think it was end of 2026, right? Is that what you're thinking?
But yeah, the estimates that Kaiser Family Foundation was putting out was that Hawaii could see lost federal funding on the order of between 300 and 500 million a year. And that's because of people not having Medicaid because either they can't meet because they fall off the rolls because of the reporting requirements primarily.
Yeah, October 1st, 2026.
Yeah. But the Affordable Care Act premiums will kick in January 1, I believe. Or at least it'll be in effect during 2026. Of course, that shows up as income for the insurer, but less spending for the households. But it only shows up as income if you have insurance, right? The people who just opt out of insurance to save money, maybe they keep spending, but I don't know. It's hard to come up with a positive twist on that.
So the council's at 4.6 and Carl, your hero is 3.8. Do you have a suggested number?
Yeah.
I gotta imagine it's got to be south of the 4.5 that we have for 2025.
Oh, absolutely.
Right?
Absolutely, yeah.
Yeah, my only question is it south of 3.8? Right. So we raised, I mean, relative to what you hear a thought in our last forecast, 2025 went up. And and I can't say that there's, I don't know, is there anything positive? Is anything for the economy? Is there anything that's a net positive in the last couple of months? I guess maybe we're going to actually start on the stadium. I don't know when they're talking about starting construction. I mean, the state coming up with money to help make sure we close the hookah for SNAP benefits is positive, but yeah, I would say 3.5.
So 1.1 percentage drop from our current forecast.
I mean, that's basically zero real growth in our
Right.
because our inflation forecast for the year, I think it's right at 3.5. I think it's come down a little bit because I mean the last data point we got was only 2.3%. There's another indicator that Hawaii's economy isn't doing very well is that our inflation rates have been going down while the US inflation rates have been going up every month. Right, the US has gone from like 2.3 to 3, and we've gone from like 3 to 2.3. Of course, we were out of sync before, but still, that's generally a sign that people are struggling a little bit.
Oh, that things are slowing.
Yeah, it's kind of consistent with the weak jobs data, which presumably is translating into weaker wage data as well. I'm comfortable with 3.8, you know, basically between 3.5 and 4 is.
Should we go with 2.8?
What does DBED have for next year?
DBED has 4.4.
So I don't know how you get a higher number for 2026 than 2025. I haven't. There's a few forecasters who, well, the way they do that is they think that tariff uncertainty is going to go away and the tax cuts are going to cause a boom in economic activity or something like that.
DBED, it is lower because they have 4.5 for 2025 and 4.4 for next year.
Okay.
So
not much lower, but it is a little lower.
Yeah, a smidge.
I'd call that the same.
Kurt, from a tax perspective, Do you think the SALT deduction is going to help people? Because that's going to increase, right, from 10,000 to 40,000 now, right?
Yeah, so it'll put more on, if you isolate that provision, it'll put more money in the economy for those people that can claim
But
40% on the
but
federal.
but it's not a huge change for individuals.
But
I mean,
there are
it matters.
There are other provisions that are supposedly intended to be more stimulus, like the bonus depreciation, 100%
Right.
bonus depreciation, they increased 179 expensing, those kind of things. So there
Yeah,
are
and
a
so people
number of
could see
provisions.
bigger tax refunds even this year because of some of the changes, and then again the following year. So yeah, there's
On the federal side, Hawaii
Yes.
generally doesn't adopt that.
Right.
Yeah.
So does
that's how you get
dropping
a faster economy, right?
Does dropping from 4.5 to 4, is that enough of a drop? That's a 0.5% for next year?
So from the current 4.6 to 4 is what you're suggesting.
Right. I'm just thinking because we said 4.5, right, for
2025.
Yeah.
I think that's
Yeah.
enough of a drop. I mean, when I look at our last forecast, it fell from 4.2 to 3.8. So I think 4.5 to 4 is fine.
Okay.
I'll make that motion.
Okay.
I'll second that.
Second, we had who second? Dr. Bonham or Councilmember?
Scott can have it.
Oh, both of you actually seconded.
Yeah.
Yeah. Okay. Any further discussion? Okay. If there's no further discussion, the motion and that's been seconded on the floor is to drop calendar year forecast from 4.6 to 4.0.
Correct.
Vice Chair Maynard,
Aye.
Dr. Bonham,
Aye.
Councilmember Hayashi,
Aye.
Dr. Ostegard Klein,
Aye.
Councilmember Hamasi.
You're
You're
muted.
I didn't hear you, sorry.
Yeah, sorry. In anticipation of being the only person that thinks it'd be a little more negative than that. So go from 4.5 in 2025 to 4.0 in 2026.
Correct.
I mean, 25, we went from 4.9 to 4.5, right? So 26, we're going to go from 4.6 to 4.0.
That's still almost. I mean, that's still almost zero in real terms. I mean, depending on your inflation forecast, we think inflation's going up. It hasn't yet for Hawaii, but we think that the pass through of tariff inflation is something that peaks in the second or third quarter of next year. Right. So if you end up with, say, 3.6, 3.7% inflation next year, that's a pretty weak. It's a relatively weak forecast.
But I mean, is the 4.0 still sending a signal? I mean, it's still, raising that, signaling that there's concern.
Yes.
Okay, I'm
You
willing to
should
go
dissent,
high on
Mike.
that.
I mean,
It's
look,
okay
they
to
had two
dissent.
dissents at the FOMC meeting, so come on.
It doesn't have to be unanimous.
Unanimous, but it's okay if people dissent.
I mean, it reflects uncertainty.
Yeah, well, if it reflects independent thinking, and we all have our own mind.
Yeah, well, I'm thinking it's going to be more negative than
Okay.
4, but if you're saying that inflation is going to be at 3.7, I'd be willing to settle in between 4 and 3.7. But that's like, I think Carl would normally say that that's splitting hairs, so I'm willing to go on with 4.0.
Budget dust.
With a little bit of a tendency to think more negatively than 4.0, but I'll say aye.
Can you say aye with reservation?
Can I?
I think we all have reservations.
Oh, yeah.
There's so much uncertainty at this
Yeah.
point. Okay, the vote carries unanimously. B-boys, we don't have like with reservations, do we? Is that a,
Not that I know of.
yeah.
You can abstain or you can vote against. I mean,
Yeah. Those are options.
yeah, we have had split votes before.
Yeah, oh, many times. Many
Mhm.
times.
Yeah, I mean, it's not that regular, but certainly we have
Not
had
recently,
them.
but
Yeah.
you know, a few years ago, we had a lot of split votes.
Back when Maryland was on the council.
Okay, so I think we, the council has unanimously adopted calendar year forecast 2026 at 4.0. I think the last item on the agenda is the next general fund meeting. When is the reporting date?
So the
Favors?
report is due on the 10th in January, but that's a Saturday.
Yeah.
So, and then, there's the New Year's. So ideally, we want that week. My request would be if we can have it earlier in the week, maybe like Tuesday the 6th or Wednesday the 7th would be my suggestions if it's possible.
What is the preference of the members, council members?
I have
Oh,
a
we
slight
should do
preference.
it earlier if we can for the tax department.
Yeah.
Okay.
So I would say Tuesday.
The only thing that would lean more toward Wednesday is the I guess getting some idea of the December numbers.
It won't be available
It
at
won't
that
be
point.
usable, it
Yeah,
won't be
yeah.
available.
It's the
Okay.
6th business day that we can know, and either way, we won't know.
I have a slight preference for the Wednesday. I'd have to do some rescheduling of
Okay.
stuff to meet on Tuesday, the 6th.
I'm the same as
Or is it-
Christy. My preference would be Wednesday. I could do Tuesday, but I'd have to reschedule a few things.
Babers, will that if we do it
Yes,
Wednesday at 2 o'clock, is that you have
Wednesday is
2 days,
fine.
right? Yeah.
It's fine for us. Yes.
How about the other members, Dr. Ostagon Klein?
Sure. So
Council-
you're saying Wednesday the 7th at 2? Same thing at 2 o'clock?
Yeah, Wednesday,
Okay.
the 7th at 2 o'clock. Is that good for you?
I think so. As a new semester, I think my class ends at 1:30, so that should be good.
Okay, Councilmember Hamasu?
We're talking January 7th, so
Yes.
yeah, I have availability at 2 o'clock.
Okay, and Dr. Bonham, you okay?
Yep.
Okay, so the next general fund meeting will be Wednesday, January 7th at 2 p.m. Okay. Okay, and Babers, when do we have to issue the report for this meeting?
Uh, well, I'll have it available by tomorrow.
morning?
Yeah,
Tomorrow morning?
if yeah.
Yeah.
I believe it's the 5th, but it's yeah, we have time. But
Oh, it's-
ideally we want it by tomorrow. I'll have the letter ready for you
Okay.
to take a look.
Okay. Okay, great. Okay, thank you, everyone. Happy Halloween
Great.
tomorrow.
Thanks. Happy Halloween.
Okay.
Thank you. Don't eat too much
Goodbye.
candy. Thanks.
Thank you.
Okay,
Bye.
good night.
Take care.
Bye.
Too late.
See you, barbers.